Okay guys, welcome back to the channel. Matt with Green Bar Trading here, and I'm going to go over something so important today. If you're a beginner trader, if you're somebody new to the stock market and you don't understand economic data and how it affects the overall market, this video is definitely going to be very helpful. So hit that thumbs up. If you're new, consider subscribing, and let's get right into it. All right, so the economic calendar is actually one of the most important things to know before you trade. I can't stress this enough. And I'm going to show you here on the S&P 500, which is right up here, starting in the pre-market at 8:15, you have this big candle, right? So if you're somebody that's trading futures or just trading pre-market on some big high beta stocks, stocks that move with the overall market, or just like I said, the futures, you need to know when these come out, all right? Especially if you're trading and you have stop losses. A lot of times you want to pull a trade before the data comes out because it whips up, whips down, as you can see here. So this was at 8:15, and I'm going to go over this economic data here, the economic data at 8:30, the one that we saw at 9:45, and then the economic data that came out at 10 a.m. I'm going to go over those four reports and why the market moves like that. All right, so let's go back and look. At 8:15, you had the ADP non-farm payrolls, okay? That came in at 127,000 new jobs. The expectation was 200,000. So that was a very disappointing number for the jobs market. Now, we're going to see on Friday the real NFPs, the non-farm payrolls that come out. A lot of times this one, it doesn't necessarily correlate with what we're going to see on Friday. But like I said, and like I showed you, it can move markets for that minute, right? So this is a negative number. This was not a good number as far as the economy goes, all right? Less people working. But for the market, and we'll go back here, for the market, the algorithms took that to mean a good thing, right? The Fed wants the jobs market to loosen up, the labor market to loosen up. And that data showed that possibility, okay? You can see here the news did not last long, and that at 8:30 we had the GDP numbers. Now the GDP numbers came in at a revised pretty big beat, and the market, now we'll go back, did not like that. So you can see here, good news is bad news for the market. Bad news is good news for the market, right? So normally a GDP beat and an economy growing at better than expected, normally, in normal times when the Fed was not so interested in every single report and in this Fed tightening cycle, you would see the market go up. All right. Now, going to this manufacturing data here at 9:45, we saw a very, very low number in the 30s for the Chicago PMI. All right, just click on that. That's the Purchasing Managers Index. So the forecast was for 47. We saw 37.2. All right. Now you can read down here, a higher than expected reading should be taken as a bullish for the USD, while a lower than expected reading should be taken as negative or bearish. So Anyway, so going into that, seeing this number, seeing how bad it was, the SPY moves up on that. So like I said, bad news, good news for the market. And then at 10 a.m., we saw the JOLTS, the job opening number, was a beat. All right, that means that there was even more jobs available, suggesting that companies still needed to hire. All right, so going back to the labor numbers, we want to see worse numbers, right? We want to see demand suffering so that companies don't even need to hire more people. All right, so that beat expectations for the market was a very bad sign. And you can see here the SPY dumped a huge amount during that JOLTS number. So this is just the market we are in at the moment. A very choppy market that is heavily dictated on the economic calendar. This is why we need to constantly be aware of the economic calendar. And today at 1:30, you have Jerome Powell speaking. That's definitely going to be something that moves the markets. And then on Thursday, the PCE, that's one of their favorite inflation guides. And on Friday, the NFPs. So, to reiterate, this is a very difficult week to trade. It's going to be choppy. It's going to be algorithms that just dictate every single quick move that we see. So if you're going to trade, that economic calendar is something that you're going to want to look at. It's something we post every single day in our Discord before the market opens. So that's it, guys. Just for new traders out there, like I said, I want you guys to be aware at how important it is to know when this data comes out. All right, so hit that thumbs up, and I'll see you guys back on the next one. Take care.